Well, hello everyone. Welcome back to our YouTube channel. Thank you for joining me, and apologies for it being a little while since my last video. Things have been a bit crazy, and just trying to focus on life things. But yeah, really excited to be recording another video, and I thought it might be interesting, I guess, for myself as much as anything, just to capture where we are at the end of the year in terms of how we've gone and where the portfolio is sitting and how things are going. So it's basically the purpose of this video. And I thought too, just to also show the changes that I've made in the share tracker dashboard as well, which obviously you can see on the screen there. So I'll talk through some of those changes as well as we go through. Also, I've decided to do a bit of a face reveal on this video. I thought, well, maybe it's time that I show my face, because I know some people have asked about, asked about it. So look, here I am. So that's just might be helpful in case you were wondering. So in terms of this dashboard, really, so it's very similar to the previous one if you've seen my previous video, but I've tried to put everything onto one page. I think I found that a lot easier to use, and I found it quite cumbersome in the last one, having to jump between different tabs and a little bit difficult to try and get everything in one go. So I've consolidated everything onto the one page, really. So bottom left here, you can see the purchase value versus the current value. So we're about sort of $9,000 up for the year, sorry, for total, not for the year, for total since purchase. So I'm really happy with that. That's really, really good. The middle two larger windows, you can see here the top one's got the capital, which is really the purchase versus current value. So really quickly you can see, I guess, firstly, how much you've invested in each holding, and then secondly, how it's performing versus what you paid for it. And down the bottom, we've got the dividend yield. So if you recall from my previous videos, I actually use a trailing yield. So I've used here the 21-22 actual yields. So we'll be updating this very soon to have the 22 and then the new 23 yield. So there is a bit of a lag there, and pros and cons, but that's the way I prefer to do it. So that works well. And on the right hand side there, the top chart there, you can see it's got dividends paid per month. So obviously it does vary quite a bit. Of some dividends, some stocks do pay monthly, some are annually or biannually. But obviously the trend line there hopefully is going up. The middle one there on the left, so right hand side, middle left, is the total dividends received, which just gives you a running total of where we're sitting for dividends received. And then on the right hand side, I've just got my actual cat has just joined me. Hello. Dividends for the year. And I can see there, obviously, this year we're performing much better, obviously, given that we've increased our holding by quite a lot. And the bottom chart there really is just showing the total dividends received by holding, and we'll talk about that a little bit later, perhaps. Now, obviously, we can use our slices here. Oh dear, what's happened? Sorry, kitty, don't do that, please. He's stepping on the keyboard. It's a classic, isn't it? He doesn't. Anyway, hello, little bear. Okay. So on the left-hand side there, the slice, you can see it controls the themes that we set up. Then you've obviously got the currency that the individual stocks and shares are in, and then whether it's a stock or an ETF, you can filter by all of those. So let's say we wanted to have a look at all the Australian dollars and ETFs. So there you go. Straight away you can filter and see all the AUD holdings that are based on ETFs. So a really good way of focusing on what you're keen to have a look at. So I'll just turn everything back on again. So let's maybe go through each of the themes. I think that might be the most interesting thing to have a look at. So blockchain really was something that I've just purchased really more out of interest than anything else, to be honest. And it was actually under what I had previously paid for it, but obviously with a bit of a resurgence the last sort of 6-8 months of sort of digital currency, obviously that has gone up quite a lot. I'm not going to really add anything more to this, to be honest. I'm quite happy with how much I've put in, but so I really see this as a bit of a bonus, to be honest. Maybe things will change down the track as, my appetite or desire to get in the space, but I do have some digital currency as well, but I'm quite happy with where that is. So I probably won't be doing much more really with that, but just I guess a pleasant surprise, really, to be honest. Dividend wise, generally pretty happy. Slightly under on the bottom left there, you can see slightly under what I paid for it. And a few interesting learnings here. So probably with the the QYLD, RYLD, and the XYLD, probably I think the dividend trap sort of thing that I know is talked about talked about a lot. It probably is a good example here where obviously they're paying back, you're losing in capital what you're getting back in dividends to a certain extent. So probably not going to add any more, probably going to hold on to it, but I don't see myself adding any more to those holdings in the next 12 months. But obviously JEPQ, probably keen on adding more into JEPQ. And I think too, really keen on focusing a lot more on SCHD over the next sort of 12 months. I'm really keen on building this up to be, not dissimilar to my JEPI or at least QYLD holdings. But yeah, quite a bit of a range of dividend plays or dividend ETFs, particularly in this space. But yeah, generally under a little bit capital-wise, but obviously they're contributing probably the bulk of the dividends. So sort of you lose some, you win some, I guess, in this case. You lose some to gain some is probably a good example. In the finance space, probably really only got, it's jumped out of stocks. So in the finance space, generally pretty happy. Probably have bought too much. ANZ's an Australian banks company, along with CBA's, Commonwealth Bank of Australia. Not going to really add any more to them. Banks is a banking ETF. iPay is a sort of payment structuring sort of ETF. Obviously, JP Morgan, Macquarie Bank as well. A few sort of bit of a spread along here. Some quite strong dividends, to be honest. Obviously, some of these are plays from, I can't recall the YouTube name, the guy of the video channel that I do watch his videos. I quite enjoy watching them, but some of the recommendations that I've sort of jumped on from him, which has been good. But yeah, generally up for the year, and probably looking to really, I guess, consolidate a little bit more in this space over the next 12 months. Probably stay away from ANZ and CBA. In the health-wise space, I do really like CSL, which is a really big sort of international blood products company. I did actually do work experience there when I was much younger, which I did quite enjoy. And Nordisk, I think it's called, obviously the maker of a lot of the sort of latest weight loss drugs, which I do think has got a lot of potential. But yes, probably look to add a bit more in this space over the next 12 months. But not particularly an area of great interest, but probably we'll just keep consolidating and adding a bit more as we tick along. Index wise, I've got obviously a big holding in VAS, which is the Australian market ETF. So I'm probably happy with where that's got to. I do really want to keep adding to some of the sort of an India ETF. I've got sort of an English ETF, sort of the FTSE 100, and also emerging markets ETF as well. So I do the next 12 months want to add to those particularly, and probably keep building up on my US ETF holdings. Just kind of waiting for a bit of a market dip to really jump on some of those. We've got a bit of cash ready to go in this space, but yeah, that's something that's definitely watching, but probably going to focus more on that sort of emerging market, England and America, or Europe sort of ETFs. Mobility-wise, it's definitely an area of great interest to me. I find this really, really interesting. I'm a really big fan of Tesla. I think it's amazing some of the stuff that he does. I'm looking at actually buying one maybe. Perhaps for my dividends may even help pay for some of that. But yeah, obviously Drive and Cars, the two sort of EV vehicle ETFs. Probably keep ticking away, slowly adding into those. I have started, I guess, diverging a little bit into sort of individual car makers a little bit, and I may do that a little bit more, or maybe I'll just keep focusing on my ETFs, sort of hedge bets a bit. It's hard to know where things are going in this space. And interestingly, I have also opted into this on the right there, TSLY, the Tesla options stock that has an incredibly high yield. Obviously, it hasn't popped up yet because I haven't updated it for 23 yields yet, but that was quite, I think it's around 20% or something, 25%. It's quite impressive, pays monthly as well, but that's just kind of a bit of fun. So if I lose it, I'll lose it. Not too fast, but definitely quite entertaining getting the dividend checks from that one every month. It's quite good. But yeah, definitely keen to keep adding to this theme of stocks. Property wise, again, a big fan of property. Do also like direct property as well. But I do really like, I think for people that are getting started out, a really good way of getting into property exposure without actually having to invest a huge amount into property. It's really good. VAP is an Australian Vanguard Australian property ETF. Obviously, I know O and ESS, and I think MPW, medical properties, I think, sort of American-based property ETFs. Again, definitely keen on adding to those over the next 12 months. I'm probably happy with my Australian holdings and probably focus a bit more on sort of some of those US and maybe even European property stocks. A little bit worried about the direction of property is going, and kind of, is it just going to flatten out, or is it going to actually, a bit of a correction? Not too sure, but I'll definitely keep an eye on this space as we go forward. Resource-wise, again, a big fan on resource stocks. And I've got a lot of actually Rio in my main portfolio holding. I kind of promised myself that I wouldn't buy any in this one, but the yield and the growth is just so good. It's kind of just too tempting, really. So I've definitely invested in that. Probably won't look to do much more in Rio space, but obviously Newcrest and BHP, APA, a few sort of smaller American sort of energy type related companies in here as well. But yeah, definitely keen to keep on topping up some of these and just slowly sort of dollar cost average in over the next 12 months. But yeah, again, generally up overall as well on a capital sort of side of things. Last but not least, too, is technology. Again, a really close to my heart sort of space. The standouts here really are Nvidia. And FANG, obviously the IT sort of tech ETF, obviously performed very, very well. Things like Intel's obviously done very well as well, and Microsoft. I have bought quite a few of these sort of on weakness. But yeah, pretty happy in this space, to be honest, how things are going. The one that I always think about selling is this one over here, BZUM, which is a Chinese, I think it's a Chinese sort of tech company. I did actually buy this before I started this portfolio, so it's a bit of a legacy hangover. And I keep thinking I'm going to sell it, but I'm then keep on hanging on in the hope that it might do something at some point. But definitely keen on adding more in this space, and yeah, to keep on growing, really consolidating in this space definitely over the next 12 months. But yeah, look, overall, really happy with how this year's gone. Probably haven't quite been as good as I'd hoped with my dollar cost averaging every month, but I guess my New Year's resolution to myself will definitely be better doing that. But yeah, otherwise, really happy actually, and looking forward to a more productive 2024 and being a bit more active in this space. I will do a video hopefully next week or so while I'm still on holidays, just of this new dashboard. I know quite a few people really enjoyed my last video. This one's actually much simpler to build, to be honest, and I think it's much easier to use as well. So I'll get that out as well hopefully next week or so. It's much quicker and a lot easier to use. So yeah, wait out for that one if you're interested. But yeah, if you've got any thoughts or comments, or you're doing something similar, look, please let me know. I'd love to hear from other people doing the same sort of journey that I am. It's really great to hear from people and what you're doing, and what you like and what you don't like. And I think for me, and I read an article on this actually recently. It was talking about the, I guess, optimizing portfolios, which can be quite I guess very simple in a way, and maybe a very small number of holdings, and sort of trying to optimize things. But I'm actually really enjoying having this many holdings. I know it's not very efficient from a fees point of view, but really from a broker, it's the fees are really so small. But I'm really enjoying having quite a diverse portfolio of stocks, and I know it's a lot more than I probably had thought I would end up with, when I started this back in April last year. But I really do enjoy it, and it really, I find it really quite interesting. And I find myself too, probably consciously trying to save money to put into this as well, a lot more. With my other holding portfolio, it's a lot more boring and, sort of steady state and just keeps on ticking away, which is great. And obviously financially is really good, but I'm definitely getting more enjoyment out of this. So, and I find that I'm definitely being more active because of it, and investing more, I guess. So yeah, some interesting articles, and I'll try and find a link to it, but it was quite fascinating, sort of the mental and emotional side of investing around something you enjoy doing. It's quite interesting, yeah, the fact that you're more likely to keep going with it rather than giving up and so forth. But anyway, if you've got any thoughts on that topic, love to hear your thoughts, or what you're doing, love to hear from you. But otherwise, yeah, hope everyone's had a great Christmas and New Year break, and look forward to investing with you all in the next 12 months. Thanks all. Bye.